excellent. Liam, I was very curious as to that one-liner that you came up with around lessons from '09 that have been learned.
Yes.
Could you just explain that a little bit more?
Well, I think there was a question, and particularly in '09, we had a crisis which was largely based on, I think, certainly from an Irish point of view, exuberance over a number of years, a lot of which was based on borrowings by companies and based on and underpinned by asset prices which were wildly inflated, certainly in the Irish property market and things like that. And a lot of the tax revenue within Ireland was based on those inflated asset prices. That's not actually where we're at the moment. We were then stuck in a situation where, when those asset prices deflated and the banks were going out of business and things like that, that all we could do was borrow to shore up. But that was basically paying back, and a huge amount of the borrowings that were happening were coming in to pay back the debts that had been incurred over the previous number of years. Essentially, that sort of borrowing, although necessary and absolutely vital for us to get out of that crisis, is pretty dead economically from a local economic perspective. But actually, kind of what we would be doing now, I think, is very, very different, in that cash is flowing out. There isn't as much cash in the economy. There's not as much cash flowing around, particularly when there's a lot of people unemployed and things like that. People aren't traveling. Areas which employ quite a lot of people are shut down. And I think there's a dichotomy there, that kind of, while a lot of industry is open, a lot of the areas that are shut are actually the areas that actually employ a lot of people, an awful lot of people in sheer number terms. And that's a big societal issue for us. But actually, by spending now, we're actually spending it to put into that economy, to actually force that cash around in the economy and being productive. It's not repaying a loan and going off there somewhere. It's actually being spent in the economy, and it is circulating as cash should within the economy. And I term that is productive borrowing. And without that type of spending, we actually have a significant shrinkage in the size of the economy. And that significant shrinkage in the size of the economy means that actually our debt ratio goes up. The amount of money and the amount of taxes we have in the economy to repay that debt is actually less. So actually, by doing nothing, we actually get into a worse situation than we're actually in. But by actually borrowing to actually spend and spend productively, there's a big debate on what we actually spend on, but that's the second part of it. But by actually spending and pushing that cash and pushing that around the economy, we can reinflate. And that actually, even though there's extra borrowing, it means that the economy is working at a higher level in order to sustain that borrowing. And that's what I mean by that kind of productive borrowing. So the learnings of the past of actually, we must actually tighten our belts and all that doesn't really work in this scenario. I think.